Good evening. We're going to start this webinar in about a minute or two. We're going to allow for a number of people to join. And it feels like we're getting a fair amount of interest for this topic tonight. So we're really excited to sort of work through some of the thoughts on this issue. So we will give it another minute and a half to let people filter in. And then Ryan, my colleague, Ryan Barlow, will kick things off. And then I'll spend a little time talking about non-compete stuff in a few minutes. But we're going to give it another minute or two. Still loading people. Zoom takes a while to load people into the meeting. All right, I think we can end the awkward silence. And Ryan, why don't you introduce the topic and do the intro stuff? So thanks.
Perfect. Well, hi everyone. We're excited to welcome you to tonight's webinar, Non-Compete Separating Fact from Fiction. With the FTC's recent ruling regarding non-competes, we've been receiving a lot of questions about what that means for practice owners and the veterinary industry at large. So tonight's speaker, Rich Lester, our CEO at Ackerman Group, will be walking through the ramifications of the decision and how it may impact you. So a couple quick housekeeping items to kick things off. At the bottom of your screen, you will see a questions and answers box. So please feel free to type in any questions that you have. We will try and answer them. We will have some time reserved at the end to address any questions we did not get to during the course of the presentation. And if you would like to schedule a one-on-one meeting with Rich to discuss in more detail any questions relating to your specific situation in practice, we will also have a Calendly link in the chat box as well. So who is the Ackerman Group? So we are the largest broker of veterinary practice sales to corporate buyers in the industry. We've done transactions in 49 of the 50 states for over $2 billion of combined value since 2017. And over the last 4 years, we've averaged about one transaction per week. We work with and have strong relationships with just about all of the 30 plus buyers in the veterinary industry. So we have a great and comprehensive understanding of what each of them is looking for. Our team at Ackerman Group is comprised of now 19 exceptional individuals with deep experience across the industry. On the left, we have our client advisors. They're the ones who help meet with veterinary practice owners, advise, consult, and guide them through their transition plans and goals for the future, and ultimately help them set the stage for an eventual successful sale of their practice. Not pictured is a recent addition to our team, Michael Kemp, as the Vice President of Business Development. He will be helping advise owners in Canada for us now. Next, we have our finance team. Next, we have our finance team. They work closely with our clients to dig into the details of the financials. We have our operations team who assists with the data collection and due diligence processes. We have our marketing team who helps market Ackerman Group within the industry as well as individual practices to buyers. And then last but not least, we have our founder and senior advisor, Dr. Gary Ackerman, who helps our team on a daily basis with insights and guidance. And finally, our speaker tonight is our CEO, Rich Lester. Rich began his career with DaVita and Bear Stearns before becoming the president of one of the early consolidators, Brightheart Veterinary Centers. After Brightheart was eventually sold to VCA, Rich then went on and founded Veterinary Practice Partners, one of today's active veterinary consolidators. So he served as their CEO for almost a decade, helping them grow from 0 practices to over 65 hospitals and 1,200 plus employees during his tenure. bringing us to today, where Rich now serves as the CEO of Ackerman Group. So without further ado, I will turn things over to Rich.
Thanks, Ryan. Really appreciate it. I like to say I have a very unique perspective on our industry, having spent 9 or 10 plus years looking to buy practices, and now the last almost 3 years helping practice owners figure out their transition plans and sell their practices. So having sat in both seats provides a interesting perspective. And tonight I'm going to not spend time talking about acquisitions, but spend time talking about non-competes. And we're calling this discussion separating fact from fiction because there's been a lot going on with a recent FTC rule that's been propagated, and understanding what that means and how that impacts you and your business, both from a legal standpoint, but as importantly, is it going to impact the valuation of your practice? Those are all things that we hope to cover tonight. And so I start the presentation with this sort of explosive image, and it's somewhat true. I mean, the Federal Trade Commission issued a ruling basically saying non-competes should not be enforceable and should not be valid for employees. They're trying to nuke the entire concept. And it's a pretty bold approach that they're taking. The carve outs from it of like what employees can have non-competes is very narrow, but it also isn't the law yet. It's just a rule that's been propagated and is subject to comment and litigation. And so I'm going to start with a little background and education, and then we'll continue into some of the details on the rule. So first, let's just take a step back and talk about what are the different types of non-competes that exist, and because there are multiple types, and what is the FTC ruling going after. And so when you are a business owner, there are potentially 3 different types of non-competes that will exist for you and or your doctors when you sell your practice. We'll start with the most basic one. So when you sell a business, a buyer is entitled to ask you for a non-compete agreement for a period of time with a certain radius for you not to compete against the business you've sold. And the FTC is in no way trying to eliminate or nuke this type of non-compete. It is core and basic to a business transaction or a sale of a business that the buyer is going to pay you a bunch of money and that they have a right to prohibit you from competing. There's real consideration for that non-compete being a lot of money for your business. And these sale of business non-competes are enforceable in all 50 states. Even California, which has certain pieces of non-competes, aren't enforceable. California recognizes the enforceability of sale of business non-competes. So the second type of non-compete that we see, it's not as frequent, is within joint ventures. So if you own your practice with other veterinarians, or if you decide to sell a portion of your practice to a corporate consolidator, you could be subjected to a very enforceable non-compete as a partner in this joint venture. All partners in a joint venture have an underlying fiduciary duty to act in the best interest of the partnership. And so an individual doctor who is generating revenue, part of their fiduciary duty would be not to push your patients to a competing clinic. And so there is an implicit non-compete by being a partner and an active doctor. And usually, at least when corporate buyers are involved, they will ask for an explicit non-compete in a joint venture agreement. And again, the FTC rule that they've propagated has no impact, and they're not trying to challenge the validity of a joint venture non-compete. So when you think about what's happening, there's only really one type of non-compete that the FTC is going after, and that's a very broad category because way more people are employees and subject to employment non-competes than are business owners or joint venture partners that are selling practices. And so the FTC has decided they believe that employment non-competes should be unenforceable. And the FTC, by the way, is the Federal Trade Commission. The FTC oversees antitrust rules, other business functions. And so what's brought us to this point is over the last 10 to 20 years, in my own humble opinion, but business owners and corporations have gone a bit overboard with non-competes. The most egregious example I've heard of is there are examples of fast food franchisees who are asking $18 an hour fast food workers to sign non-competes and not go to work at competing places. At that level of employment, the validity and the necessity of that type of non-compete feels like it's going overboard. But as more and more businesses got aggressive in asking for non-competes, there's been a reaction to it. And the reaction to it is a very broad rule that the FTC is propagating to try to rein in non-competes. So it's important to understand not all non-competes are being sort of challenged by the government. It's just one of the three segments that we see. So one of the questions I get asked regularly is, so is it fair to put in a non-compete? And I always like to say fairness is in the eye of the beholder. It depends on your perspective and your seat at the table. And a business owner has a different perspective than an associate doctor who might be asked to sign a restrictive covenant. And so I wanted to spend 2 or 3 minutes giving you some perspective of what we hear from practice owners as to why non-competes are essential, why we think associates view them as restrictive and challenging, and sort of give you some thoughts on a balanced or fair view. And I will say I tend to be a little bit biased towards the owner's perspective. I think as someone who's built and run businesses, when you take risk in building a business and you take risk in investing money and building a company that is creating jobs, you want to protect that business. And so those of you in the audience who are practice owners, the way I view this, the non-compete issue from your perspective, and this is the way we would communicate the need for non-competes to associates when I was running Veterinary Practice Partners, sort of the following argument. As the owner of a veterinary practice, we are investing real money that either buying a building or leasing a building and then building out a veterinary clinic, actually spending money. Then we take risk in hiring people to staff that. We have to spend money to market to clients, and those clients come to the clinic. And when a new vet is being hired, they're walking into a business that's had a lot of capital deployed. It's taken risk. And by the way, the majority of doctors walking into a new job aren't bringing any clients. They're going to build clientele based on the capital and risk that the owners have invested in that hospital. And by giving that employee, that associate doctor, the opportunity to build a clientele in the business that the owner has built, there should be some protections for that owner. And that argument or that logic set, when you describe the risks that owners have taken, I would say it doesn't resonate with all associates, but it's the most persuasive argument I feel like I've come across in my 15 plus years in the industry. And so that's the owner's perspective. What is the associate's perspective? Well, having talked to many associate doctors, they'll say, hey, I've invested hundreds of thousands of dollars in my education. I need to earn a living. I don't want to have to be trapped in a job that I don't like, or if the owners change, or if the work environment changes, I don't want to be restricted from working elsewhere or be forced to move or relocate my family or myself somewhere else. And the right to work is a rational argument, especially for a professional who's invested a lot in their education. And so there's both an owner's and an associate's perspective on non-competes and the validity of it. And I always say that fairness is in the eye of the beholder. And when I think about it, I definitely view non-competes as necessary, but it's really about order of magnitude in terms of geography, how many years post-employment, and what is fair and reasonable. And again, that'll depend on who the person is you're talking to, but it also depends on the situation. So the example I give, if you're in rural Arkansas where your clients are coming from 30 miles away, a 30-mile non-compete could be fair. But if you're sitting in Midtown Manhattan when your clients are walking 10 or 15 blocks, a 1-mile non-compete in Manhattan's pretty broad. And so if you're in a close-in, densely populated suburb, 5 miles, your clients may only come from 3 to 4 miles away. And so tailoring the non-compete to the geography and the situation is really important. And then the duration post-employment is also another really important factor. 3 years post-employment just feels too long and not overly reasonable. 12 months feels a little short, but not terrible. And we usually came out somewhere between 12 and 24 months post-employment for associates. I think it's just overall important to protect the business, to explain to your associates why it's important. But also, I'm not a big believer that technicians, veterinary assistants, reception staff should have non-competes. They haven't spent as much on their education. They're lower wage workers who should have the freedom to go wherever they want to go. And then finally, I just want to make a comment about the emergency doctors. Veterinary Emergency Group, or VEG, made a big splash about 12 or 18 months ago by saying, hey, we're no longer going to ask any of our ER doctors to sign non-competes. And the reality is it was brilliant marketing, in my view, because it got a lot of press, got a lot of attention. But the reality is you don't really need non-competes from an ER doctor, because ER doctors aren't building long-term client relationships. People are coming in on a one-off as needed basis. So again, kudos to VEG for sort of being first to do it. I think a lot of ER doctors are not being subjected to non-competes, but from a business ownership standpoint, they're really not that relevant. So it's not a huge give on their part. Wanted to also talk a little bit about non-solicitation provisions, especially in a place like California where non-competes aren't allowed. But in every market, non-solicitations are important and should be a part of your doctor contracts. What is a non-solicitation? It basically says, ask the associate, once they decide to leave a practice, that they're not going to induce clients or staff or contractors or other folks associated with your hospital to leave the hospital and follow them to wherever they go. And so that feels fair. It feels logical. Hey, I've given you this opportunity to work here. You can't solicit my people. Sounds reasonable, but as I always say, the devil's in the detail. So when non-solicitations are written, it's usually written that there will be no direct solicitation. And that's pretty easy to define. So your associate says that they're leaving. If they start calling clients, that's a direct solicitation. If they send emails to your clients saying, hey, come follow me to this new practice, that's clear violations of a non-solicitation provision. The definition of an indirect solicitation, much more complicated. And what is exactly an indirect solicitation? Well, is sending out a mailer in the zip codes that your clients typically come from, an indirect solicitation. If you're sending the mailer to everybody in the zip codes, not just ex-clients, that would probably be viewed as an indirect solicitation. But would posting the bio of the doctor who's leaving on the website of their new hospital be an indirect solicitation? Probably not, because they have a right to market themselves, and the web is sort of a pretty free and open place. And so the advice I give on this is, with your doctor contracts, make sure you have a reasonably smart attorney who understands employment rules and can craft a thoughtful non-compete and non-solicitation provision to protect you. And you need to communicate clearly and thoughtfully to your associates why it's important, and most importantly, the value that you're giving them when you're hiring them to build a business, and that you're just trying to protect that business. So that's non-competes, non-solicits. And now let's talk about what we've learned from markets where there are no non-competes that are enforceable for employment. And the biggest test case for that is in California. So California has banned employment non-competes for a number of years. And there's one really simple and important conclusion that we've learned from the California experience. We do not see any discounted valuations in California because of the lack of non-competes from doctors. So even if the FTC ruling were accepted, would it impact the value of practices? Our California experience says no, but I'm going to hedge a little bit. And the hedge on that is virtually, we've sold probably 50 practices in California in the last 6 years. The vast majority have sat in San Diego County, Orange County, Los Angeles County, and the San Francisco Bay Area. All really heavily populated areas with really high real estate costs. And so the cost of opening a new clinic in California, much higher in especially those regions than in a lot of other parts of the country. So those high real estate costs do provide a little bit of protection against associates going out and opening up new clinics. They don't provide any protection from them being hired away by the clinic next door to you. And so they may not start a clinic, but they can go work anywhere else. And so our overriding conclusion is associates are really free to roam in California from practice to practice, and it hasn't impacted valuations. We do see non-solicitations being very important, not just in California, but everywhere. But I'd say we see it more attention paid to them in California because practice owners are trying to protect themselves. There are other states that have eliminated non-competes, and in those states as well, we really haven't seen any valuation impact. And that is the real conclusion that we wanted to communicate, that we're not seeing real drops in valuation of veterinary clinics in these test cases or test states where they're already not allowed. So now let's take a step back, and the whole webinar is based on this FTC pronouncement, and what should you be thinking about? What should you be doing? And I didn't want to put up a whole bunch of legalese, which was the actual pronouncement, but the actual rule that they've promulgated basically says employment non-competes should go away. There's a comment period going on where people are allowed to comment on it. But more importantly, there have been dozens of lawsuits filed against the FTC and the government, saying that the FTC doesn't have the authority to promulgate this rule. It requires an act of Congress. And there's all different slants on these lawsuits. And the bottom line is the lawsuits are going to delay the implementation of this for a number of years. And on top of that, politics plays into account here. So we've got a big election coming up in November. If the Republicans win the White House, the likelihood that this rule will just be pulled is really high, because a new leader will be put into the Federal Trade Commission, and anyone a Republican president appoints would likely say, we're going to leave employment non-competes in place. If the Democrats win the election, we clearly think that the rule will continue, the process will continue, but you will see a number of years, 3-4 years probably, before this winds its way to the court system, and it will likely end up in the Supreme Court. And the Supreme Court will likely ultimately rule on this. And given the makeup of the Supreme Court, it feels like it's unlikely that the Supreme Court would agree with what the FTC is trying to do. The Republican and conservative majority on the court will likely protect practice owners for years to come, until the court changes composition. So we really think that there's not a lot of short or medium-term issues with this FTC pronouncement. What should those of you on this call do as practice owners? Our advice is really simple. Keep doing what you're doing. Continue to ask for non-competes from your associate DVMs for all the reasons I laid out a few minutes ago. You need to protect your business. Know that corporate owners and corporate buyers are going to continue to ask for non-competes. And the single biggest thing that prevents transactions and sales with corporate buyers from happening is associates balking at non-competes if they don't already have them. And when we start talking to new clients and new potential clients, one of the first questions we ask is, do your associates have non-competes? What do they look like? Because we know a corporate buyer is going to insist on that. And so it's an important piece. It's not an easy ask. There's a lot of noise, but it's an important part of being a practice owner, is providing those protections for your investment and for your business. You want to do it in a fair and reasonable way so that your associate veterinarians have choice. You just don't want them to have choice too close to your practice. So before I turn to questions, I'm going to do a quick advertisement. Ackerman Group sponsors a CE only veterinary, an owners only continuing education conference called insightful.vet. We ran our first conference in Denver this past October. In September, about 3 months from now, end of September 2024, we're having our second version of this in Philadelphia, September 26th to 28th. The conference, we think, is really unique in the industry for a number of reasons. One, it's really targeted to practice owners and their practice managers, focused on really practical business advice. About 60% of the content is how do you run your practice better, thinking about pricing, recruiting, managing your P&L, getting real advice from panels of practice owners, how to work on your reminder processes, just all the blocking and tackling things that you need to do to run your practice. And about the other 40% is around sale process, deal terms, financial planning, what to do with your real estate if you're selling, et cetera. So it'd be great if any of you want to join us for this conference. We're probably putting a link to the conference in the chat, www.insightful.vet. And before I take call, if you have questions, please start putting them in the Q&A. But my overall advice is, please don't freak out about these non-competes. Right now, it's a lot of noise. Don't rush to sell your practice because of the FTC pronouncement. Valuations haven't really been impacted. If you need to or want to sell for other reasons, it is a very good time to sell your practice. Valuations are still strong. Make sure you have non-solicits in place. And when you sell, buyers are going to ask for strong non-competes. So I'm now going to go to the Q&A. I've got about 4 or 5 questions here. I'm going to start, and some folks have put some long comments in here. So I'm going to read something from Paul. I disagree with the premise that non-compete protects the owner's investment in an associate. You protect that investment by ensuring your people are well paid, well treated, and given opportunities to grow. Owners who rely solely on the associate to build relationships, loyalty with clients, only have themselves to blame. Business owners are responsible for ensuring a differentiated experience that builds loyalty to their brand. The cost and risk of owning a business are the choice and responsibility of owners. Investing in your employees is a standard cost of doing business. I couldn't agree more with any of those statements. I mean, you want to keep the best businesses, the best veterinary practices. If you've got 7, 8, 9 doctors, they've built strong cultures and they don't have high turnover, but they still have a right to protect themselves because they're giving us, in my view, because they're giving opportunities to associates to grow, learn, develop client relationships. If you develop a 3, 4, 5 doctor practice, which are the things that corporate buyers want, there's no way the practice owner owns all of those relationships. They've delegated and allowed those associates to build. And so, Paul, we have some differences of opinion, but some similarities. I mean, building a good business is important, but protecting that business is also a wise thing. And leaving your associates the freedom to just leave and go next door to a competing clinic, I would just view as not a great business decision. I agree with all of your philosophy that you want to build loyalty through opportunity, providing high pay, etc. Those are all valuable things. Next question. Larry's asking, I sold 70% of my practice to NVA a while ago with absolutely no idea that they would not renew my annual contract, especially since we were doing very well. They will not give me a reason for not renewing. My contract states that I would be the managing DVM. They made an associate of mine managing DVM 2 years later against my wish and advice. Now they say they were not renewing my year-to-year contract. I'm a specialist. I am setting up a new practice, which will not compete with them. But employees want to come with me and my contract says I cannot hire them. Seems unfair. What do you think? So I think a few things. One is, again, this is the definition of solicitation. I'm now going to take the employee perspective. So you are not allowed to go actively recruit those employees. But if you post ads for staff and staff members respond to those ads, you haven't solicited them as long as you're posting those ads publicly and everyone has a chance to respond. I don't know how long the non-solicitation lasts, but if it lasts a year or 2, you may want to delay so that you just don't have a fight with them over it. But it's one of those things. It's not simple. Happy to set up a few minutes to talk to you, but this feels like I'm going to call it a difficult situation and requires a little bit more thought from just what you've typed here. All right. Next question. Veterinary hospitals in states where non-competes are illegal are still very profitable and have been operating without issues for years. That's from Paul. And Paul, you are absolutely correct. And that's why I say that valuations, the FTC rule hasn't impacted valuations. But as a business owner, my still suggestion is that you protect yourself. And everyone has their choice on how they want to run their business. And again, the other comment would be about the non-competes. And Paul, it seems like you're passionate about not having non-competes. I would say to you that if you are a business owner and you want to sell it to a corporation, you're going to not get full value if you can't deliver non-competes to those corporations. It's a really important piece that every corporation is going to be looking for. All right. Michael asks, It is true this ruling is not federal law. How do you expect the courts to rule on cases of employees seeking to negate a non-compete? So currently, this is going to be a state by state issue. There is no real federal overlying law, and the rules in California are one thing. The rules in Texas, Georgia, and Massachusetts are different. Blue and red states have different perspectives. I would say a couple of things. Most corporations don't want to go to court over non-compete issues because, they usually go to jury trials, and jurors are usually not sympathetic to business owners. So how courts rule, it's hard to guess, and it depends on the state by state situations, is the way I would put it. And that's why I always recommend that you talk to a attorney that has employment expertise in your state. Each state has very different rules. So Michael says, thanks for the info. I'm in the process of getting offers from several investment groups, 2 yesterday, 1 coming in yesterday. This info makes me feel more informed. Thank you. All right. Well, great. I'm glad we were able to help, Mitchell. And then Paul, one last time, the AMA and the American Bar Associations have deemed non-competes unethical for human healthcare doctors and lawyers. Do you have an opinion why the AVMA hasn't taken the stance? I knew about the Bar Association. I wasn't aware about the AMA. I know many human doctors do have non-compete agreements, especially when practices are being sold. I think the American Bar Association is protecting lawyers from themselves. And I don't know enough about the AMA, and I'm not well versed on why the AVMA hasn't taken the stand. But my guess is that a lot of the AVMA board and members are practice owners, just to be frank, and have interests in protecting the businesses that they've developed. All right. Any other question on these topics? It's been a very interesting set of questions. I'm going to hang on for another minute or two to give folks a couple more minutes if they have more questions. Remember, you punch the Q of A down at the bottom of your screen and type in any questions that you may have. And if there's nothing else, I'm going to say we got through this relatively quickly. Appreciate all of you who have attended. Those who didn't attend will be getting a tape of the discussion tomorrow. And if you have any thoughts, questions, don't hesitate to email me, contact me, or someone on our team. So thank you very much, everyone, for attending. Have a great night.